You're thinking about buying a home, but you don't know where to get started. Guys, watch this quick video and I'm going to tell you what the very first step is when you're even considering buying a home. Hi guys, my name is Chris Hooten and I've been a mortgage loan officer for over 20 years. During that time, I have helped hundreds of first-time home buyers get into that house and start building equity for their future. And I'm often asked, what's the first step? Or actually, I should say, I'm often told what someone has heard they need to do as the first step. Sometimes it's great information, sometimes unfortunately they were led astray. So I'm going to tell you from the horse's mouth, someone that's been doing this for over 20 years, the very first step, okay, is to sit down with a professional loan officer and create a game plan. Okay, and that game plan sometimes will end with being pre-approved, sometimes will end with what you need to do to get to the point where you can get pre-approved. So I want to talk about the pre-approval process specifically. Okay, people ask, well, what do I need? What are you going to need from me? What are you going to do? How does a pre-approval work? So a pre-approval is basically taking an overall snapshot of your current financial situation. We look at your credit. Okay, not just your credit score, but what debts do you have? How long have you had credit? How much credit do you have? What's your past history? Are there anything on there like bankruptcies or foreclosures or car repossessions or collections? We look at all of that because all of that goes into the end decision. Then we look at your finances. Okay, what is your monthly income? And we're looking at gross income, so that's before taxes. If you're a wage earner, if you're self-employed, it's a little bit different. We have to look at your net income after your expenses. So once we determine what your monthly income is, we determine based on that number, whether it's just you or you and a co-borrower, or you and a co-signer, you and a spouse, whatever the situation is, we add all the income together and then we look at current monthly debts and then we add in what your new mortgage payment will be, including taxes, insurance, everything, and that's how we determine how much you qualify for. It's called your debt to income ratio. So let's just say your monthly gross is $5,000 a month, you have $1,000 a month in regular payments, car payments, credit card, that kind of thing. Then we determine how much of a mortgage payment you can add on top of your already debt with your $5,000 a month income. And that's the amount that we pre-approve you for. So in a perfect world, client sits down, we go over the whole process, look at what their loan options are, down payment options, different programs that they might be eligible for, and hopefully end that meeting with a pre-approval and amount that you can start looking for. Because what happens a lot of times is when people start thinking about buying a house, what do you want to do? You want to look at houses. So you start looking at pictures, you start talking to realtors. Meanwhile, you have no idea what you qualify for, you don't know what the payment is, you don't know what the down payment's going to be. So it really gets reversed a lot of times when that first step, the most important step, is knowing where you're at financially, how much you qualify for, if there's anything to fix, what is it, how do we fix it, when will you be ready. So when you're pre-approved and you go out looking, it's when you have that pre-approval letter, it's literally like having cash saying, I can buy this amount of a house. I know that. So when you find the perfect house, you can make an offer immediately, because in this market, coming to you in 2020, it's one of the hottest markets that we've ever had. If you see a house today and you like it, if you don't make an offer today, it will be gone tomorrow, and or there will be dozens of offers that you're competing with. So having that pre-approval in your hand is like having cash, because you know exactly what you qualify for. So best case scenario, we meet, answer all your questions, give you a pre-approval, you start shopping. The second thing that happens probably more often than not is there's something that we need to work on, or the timing is not right. Okay, you're looking at buying maybe next year, or you're waiting, for something in your life to change before you're going to buy. You still want to have a plan. Is there something that you need to work on your credit? Because credit score can radically change which programs that you're eligible for, what your interest rate is, how much you have to put down. So if we can get your credit score up to that next tier, it could save you thousands of dollars over the life of the loan. Okay, so game plan for your credit. Are there some things you need to pay down maybe so you will qualify for the house payment that you're looking, or the sales price that you're looking for? So we can look at that as well. Then just overall kind of analysis, is there anything that we need to take care of, whether it be credit or debts or anything like that, that is going to prohibit you from being ready when you want to be ready. So guys, I'm going to go back to my very first statement, and it is the most important thing when you're even considering buying a home. Get pre-approved, sit down with an experienced loan officer, get all your questions answered so you know what to expect during the process. Guys, I hope this was helpful. My name is Chris Hooten, and I am your MLO. Thank you.